Morning, everyone. This is Rajendran here, joining from Market Calls. And in today's session, particularly, we're going to learn about how to trade sideways market using Bookmap. Very apt session for the current market scenario. And in today's agenda, we're going to talk about what is Bookmap, how to understand the volume activity using Bookmap. Particularly, we're going to learn about liquidity and volume. What is the difference between liquidity and volume? And anatomy of the sideways markets. What I should understand from a sideways market, how to anticipate a sideways market, when to anticipate a sideways market, because there are a lot of traders in the market. 75 to 80% of the traders, they trade momentum, they chase momentum. But majorly what happens is like sideways markets. So today we're going to learn about sideways market. Today we're going to learn about liquidity, and today we're also going to learn about the difference between liquidity and volume. And of course, some traditional topics like how VWAP is going to help, particularly in a sideways market environment, and what is initiative drive and absorption. And we're going to look into the current market scenario of Nifty and Bank Nifty using the Bookmap tool. So talking about Bookmap, first of all, Bookmap itself a visualization tool. Means when I say visualization tool, we have to look through the information and we have to take a trading decision. So means it is more built for visual rule based traders. Traders who want to see the current volume activity. Bookmap itself tracks the volume activity. It arranges the volume information in the form of bubbles or in the form of liquidity bands, or it also arranges in the form of, recently they also launched a footprint module also, where you can see how the aggressive traders are behaving, how the liquidity providers are behaving. So we can able to understand the trading environment. See, something like, if let's say if I am starting a business, I will definitely love to see or at least try to understand what my competition is doing. Let it be any business, let it be an import business or export business. Even if I'm a Mark Zuckerberg, what I'll do, I'll try to understand what other social media is doing, right? That is what a competitor analysis is all about. So only in trading, we don't do that competitor analysis, which is what Bookmap is capable of doing it. Bookmap helps you to understand the visualization of the competitors. So who are the competitors? Anybody other than me is a competitor. Right? So when it comes to markets, our competitors can be aggressive traders and competitors can be passive traders, which we can visualize using Bookmap. We can visualize both market order also. We can visualize the limit order activity also. But as far as the Indian market is concerned, for time being, because of the data restriction, we can only visualize market orders. Maybe if you are trading in US markets or Bitcoins or crypto exchanges, you can visualize both market order as well as limit orders. Market orders in the form of bubbles or heat maps. I mean, market orders in the form of bubbles are in the form of footprint charts, and limit orders, mostly Bookmap, you can visualize in the form of heat map. So it looks something like this. So Bookmap itself more suitable for traders who are purely intraday traders or scalpers, very, very short-term traders who are looking for very faster opportunity or shorter opportunities. And obviously, it is not a tool for investments. It is not, definitely, it is not a tool for something like I want to buy today and I want to hold it for next 1 month or so. Definitely, it is not a tool. It's a tool purely for traders. So this is how the traditional Bookmap chart looks like. I'm sure if you're already in Discord community, then you know what Bookmap is doing. So I'm not going to go more into the very basics of Bookmap. So maybe we'll touch base here and there about some of the Bookmap tools, and then very quickly we'll look into the current market activity. How to read the Bookmap charts? The bubbles, whatever you're seeing, the green bubbles are nothing but buy market orders. They pushes the market up, and there is a sell market orders which pushes the market down. And at the bottom, you'll be able to see the delta activity, which is called as a cumulative delta activity. It's a delta activity for that particular day. It starts at 0. If the value is increasing, that means more aggressive buyers, more buy market orders are coming into the markets. If the value is sliding down, that means sellers are taking control of the markets. And straight away we go to the Bookmap tool and then we'll try to understand the current market activity. So this is the current market activity. Of late, you see that the markets in a highly volatile market, the behavior will be different. But right now, the volatility in the market itself lower. So when the market itself lower, so what happens is like sideways market is what traditionally happens. So look at the pink color lines. That's a VWAP tool. Price is hugging through the VWAP tool. Not only today, many other days, price has been using the VWAP itself acting like a magnet. So means what? Pricing, the buyers are pushing the price up to a certain extent. We look at that. Initially, volumes are good. Big bubbles means bigger volumes. And over a period of time, it is getting like small and small volumes. Price is attempting to trade towards a peacock. This is point of control. Point of control is a place where more volume happened in yesterday's scenario. This is a point of control from yesterday's one. Price nears the prominent point of control. It is not able to get back up. In fact, volume started running dry, and prices mean reverting towards the VWAP levels. Again, one more attempt, a very small attempt. Price is once again coming back down to the VWAP levels. Now, the volume activity in the last 4 days, volume has been running very, very thin. When a thin volume activity is happening, usually market tend to take a sideways approach. So those are the places VWAP always can be used as a potential target. It is very difficult to trade the directional markets here. So what we will be trading mostly is like we'll be looking for a mean reversion trading opportunity. Most likely a mean reversion trading opportunity towards the VWAP, because it is what is going to act like a magnet most of the time. So first, we'll try to understand why the market goes sideways. What do you think? Why the market goes sideways? You can just comment it out. You can comment in the Discord also. So maybe I'll also open Discord simultaneously to take questions. So Urushi, where I can see the comments? I'm sorry, I'm not able to see any comments like.
So you need to tap on that Bookmap India voice channel. Yeah, and then on the top hand right hand side corner you can see chat, right? Yeah.
Okay, so Sunil is saying like accumulation and distribution. That's what Sunil is talking about. That see, accumulation and distribution is something happening at a massive scale, right? So maybe if I am a mutual fund or I'm in a fund or any macro fund or even a macro hedge funds or AAF funds, if I prefer to accumulate, I will be accumulating or distributing throughout the day. Or if I'm accumulating a particular stock, let's say Reliance, I'll be accumulating for maybe entire month. I might accumulate, or maybe I'll be slowly purchasing in the next 3 months. I'll be slowly purchasing in the markets. So without disturbing the markets, I will accumulate. It doesn't matter wherever the price are, I will be slowly purchasing without impacting the markets. Will that create a sideways market? If you ask me, absolutely not. The sideways market create for various reasons. Yes, accumulation distribution creates a sideways market on a broader scale. At a very microscopic scale, we are talking about it. Accumulation and distribution is one of the reason, but that is alone not a reason. There are a variety of reasons a market can go sideways. For example, think about a scenario over here. Maybe I'll try to pull up my whiteboard. So let it be a whiteboard session. Let's say a traditional bull market. Imagine a traditional bull market. A traditional bull market usually goes with big volumes. Initially, the volumes, more people will be interested. Maybe that is the basics of auction market theory also. So maybe you might, if you are familiar about Bookmap, obviously you would have heard about auction market theory, AMT. So what the auction market theory says, when any auction is kickstarting, initially very less people, they will come and compete, but as the trend is picking up, more and more people will come and compete. So more and more people will be coming and competing, and the auction will keep going higher, and more people will compete. The auction will heat up. So now everybody want to participate. But after reaching a certain point, the volumes will start running dry because very few people might be interested in that price because price is going up and up and up and up. So initially what happened? More people competes, more people competes. As the auction further going up, very less people competes, very less people shows interest in that auction, shows interest. And at the top of the markets, hardly very few will be competing. Very few, not even very less, but very few here and there. Very few guys will be showing interest. Very few people. You take any traditional auction, even if you take any traditional auction, also more or less the same thing only. The classical example is like what I showed you in the Bookmap, the tool what I showed you over here. So initially in this uptrend, very few people are showing interest. I mean, very more people are showing interest. Start of the day, a lot of people showed interest on the buying side, and as the market goes sideways, and once again new auction is starting up. Here also initially they showed interest, but as the prices keep going higher and higher and higher, only very few people are competing. Volumes are running dry. So what happens? What happens? I'll tell you. Some smart traders will come and they'll start booking profits if volumes are keep on drying and market keeps on going up and up and up, irrespective of the time frames. Does the market always has to be topped out like this? Not necessarily. But these kind of price action will bring a quick trend reversal. Most likely, if you are watching from an intraday perspective, most likely VWAPs are potential target destination. So these kind of price action, this kind of a thin volume price action is what we called as a. I mean, in my terms, I call I called as an thin volume activity. Thin volume activities are one form of an exhaustion from an intraday perspective. That doesn't mean like it is a top or something, but it gives temporary reversal, temporary, quick trading opportunities towards the VWAP levels. Right. So let's try to summarize what are the reasons why market goes sideways. Why market goes sideways? Yes, sometimes the major reason why the market goes sideways is because of liquidity. How many of you know this reason, liquidity? Because of the market makers. I'm going to talk about that. They're the one primarily responsible for a market to go in a sideways fashion. And number two, it can happen because of lack of enthusiasm. When the market is keep on going higher and higher and higher and higher, more people will be cheering. Yes, when the market is even hitting an all-time high also, more people will be cheering. But when the market's further going up and up and up, the amount of people who are going to cheer for the price slowly it start dropping down. That is what we call as a lack of enthusiasm. Usually, what will happen? It will invite. That is what we call as one form of a momentum exhaustion. So it can happen because of momentum exhaustion. It can happen momentum exhaustion. Momentum is there, but that momentum is slowly fading away. In that case, we'll be experiencing that particular time. We'll be experiencing dull, boring price actions. Lack of enthusiasm can happen for a various reason. Maybe that particular day, it could be a casual day, or maybe it could be a holiday somewhere. Let's say next month, December is there. December 25 onwards, many people will be going for a holiday. It's a long holiday. So many institutions, they prefer to trade lightweight. When they are trading lightweight, then still there will be lack of enthusiasm will be there. Markets are likely to prone to go sideways. Or ahead of the event, sometimes ahead of any major event, ahead of any major event. Something like when it comes to Indian market, let's say tomorrow there is going to be an RB announcement, or maybe some very important Fed announcement is there tomorrow, or maybe tomorrow there is going to be a budget announcement. So whenever there is any major event is anticipated, planned event I'm talking about. Not an unplanned event, not something like an Ukraine war tension or something like that. Not like a geopolitical tension I'm talking about. Any planned event where some announcement is supposed to be due in a very, very short term, like maybe tomorrow. So ahead of a major event, sometimes what will happen is like generally long-term players, they avoid participating in the markets. Dominant traders who move the markets, aggressive traders, they don't want to take an immediate decision. They want to wait for, particularly institutions, they want to wait for the event to get over. And post that, they want to come and compete in the markets. So ahead of any major event also, market goes sideways. And of course, yes, accumulation and distribution, definitely that is also responsible for sideways market, but that alone doesn't contribute to the sideways markets. It's also part of the accumulation or distribution. Now, the topmost reason we'll try to talk about it. The topmost reason is what? Liquidity, right? Let's go and try to understand about liquidity here. So first we need to understand what is liquidity and what is volume. What do you think? What is liquidity and what is volume? Definitely, if you are trading Bookmap, you should have a clear idea what is volume and what is the liquidity. Can anybody respond in the Discord channel? What is liquidity and what is volume? How do you differentiate both? Maybe let me pull up Discord here. Anybody? What is liquidity and what is volume? Okay, maybe I'll try to give a glimpse about that. Sunil is typing. Maybe in the meantime, I'll try to talk about the different types of price action. So there are always, we can classify any kinds of price action into three different categories, right? Number one type of price action. One is initiative drive. Initiative price action or initiative drive usually happens with strong volume, strong direction. So here we'll be seeing a strong volume and direction, also strong direction, strong upside or strong downside, strong direction. So here, remember over here I'm coming with only about the volume activity only. Second one, we know that it is more of a responsive price action. Responsive auction also, volume happens with a strong volume. But here we don't expect strong direction, but instead we expect a strong trend reversal. Strong reversals. And third one is what we call as a consolidation. So consolidation is like what? Low volume activity. Nobody is competing. Now, what is the difference here is like it is more connected to the liquidity. So that is what I want to talk about. That here we talked about only one side. We talked about only from the volume perspective. But let me tell you, if I am placing a market order, if I'm placing a market order, I'm placing a buy market order, then I'll be buying from a seller. The seller is whom? The opposite side, the seller is more of a limit order, right? The seller is more of a limit order. Yeah, mostly it is nothing but liquidity. It is taking the liquidity. It's consuming the liquidity. The one who is sending a limit order is nothing but what? They are liquidity providers. I'm buying it from a liquidity provider majority of the time. Now that liquidity provider can be an high frequency trader, they could be an market maker, or they could be even at times institutions also, if institutions are accumulating and distributing. Right, but 80% of the time I want to buy it from a liquidity provider. If I'm placing a buy market order, I'm going to buying it from an market maker. Even if I'm going to place a sell order also, if I'm going to place a sell market order, then I'm going to buy it from a limit order, mostly again from a liquidity provider. So what are the odds? 80% of the odds. 80% of the odds that mostly market orders are likely to interact with liquidity providers. Maybe even if I am sending a limit order to place my order, I'm also one form of a liquidity provider. But that is not my business. For market makers, providing liquidity itself a business, right? Probably off late you would have heard that the FTX exchange, one of the crypto exchange went bust, and they have an hedge fund called Alameda Capital, right? So Alameda Capital is one of the liquidity provider. Liquidity providing is not that bad, but if it is done not in the right manner, it could be bad. A lot of very good institutional liquidity providers are there. Like Verto is there in US, and Citadel is there. Jane Street Capital is there. Like a lot of liquidity providers, they do in the markets. Mostly they are brokers. Mostly they are prop trading desk. Right? Mostly, I mean, they're also one form of an institution. They trade their own accounts. So when they are floating the liquidity is nothing but what? Pending orders. Let's say if that particular day market makers are sending liquidity orders in this band, if more and more liquidity they are willing to supply, probably that particular day market makers would have been came up with a mindset to supply liquidity. They wherever the price moves, they try to send liquidity. Means if the price is moving like this, then they will supply more liquidity around this level. If again market comes down, then they will try to supply liquidity around this level. If the price again moves up, they will be supplying liquidity pending orders around those levels. Now sometimes what they do, some institutions or somewhere, they might be placing a strong liquidity at one of the band. Strong liquidity means continuously they will be supplying liquidity. They'll not only float liquidity, sometimes they'll also defend those liquidity. So liquidity means what? Pending orders, as I said, pending orders, right? Pending orders. Right? Pending orders will not be present all the time in a fixed manner. Sometimes they'll float the liquidity. Now, those kind of liquidity, if it is floated, means somebody is waiting for that level to get a fill. So, what is the intention of floating and liquidity? Why they should place a pending order? Generally, market makers will not float a pending order. Sometimes institutions are the one who place a pending order. They place the pending order. The pending order stays. Remember, the pending order stays. Maybe if you are using ES mini or kind of US market, you can find that how the liquidity stays. Now these liquidity orders, somebody would have been floated for a reason. Maybe the intention could be only two things. They are waiting for a fill. If they are waiting for a fill, what will happen? Price will go back and touch those level, and more transaction happens. The opposite party who is sending a pending order is happy because they want a fill. So they showcase that I'm here, and price also, they come and take those liquidity. Price usually come back and touch those levels. This is one intention. So one of the intention is what? To eat. They know that price is going to come back to this level. So they float the liquidity because they want to transact at that level exactly. Maybe their intention, they want to sell it at that level. They want to sell passively at that level. If the price is coming to that level, if the price is coming and touching that level, they want to sell in the markets in a passive mode without disturbing the market activity. So they float pending orders. Pending sell orders if they are keeping at the top, and if they are putting at the bottom, it could be pending buy orders most of the times. This could be like pending buy orders. Pending buy orders. I'm sure you would in price action you would have been studied in the form of supply zone and demand zone. But the only thing is like in Bookmap, you can visualize those zones where the pending orders are really there. Right? As I said, for Indian market, time being, there is no such kind of heat map facility is not available because of the data constraint. But still, you can visualize based on what the market order itself doing. Right now, as of now, when it comes to Indian market, we have only the market order is the only dimension we got. So we have very little idea about where the limit orders are. But from a trading perspective, if you understand the auction market theory very well, definitely that is a very basics for using the Bookmap tool also. If you understand the auction market theory in a very well manner, definitely one can easily, with even with market order alone, one can definitely handle the information. Maybe if I'm having a limit order information also, the pending order information also, maybe my decision making skill will get even more better. Definitely. So at some point in time, I think it's going to happen in Bookmap. If at all not today, another 3 months from here or another 6 months from here, it's going to happen. I'm sure about that. But now coming back to the topic. So institutions always they float liquidity, but market makers what they do is like they chase the price action and they supply liquidity. Means as I said, if the price action moves, they supply liquidity over here on buy side also, sell side also. This is like sell side and this is like buy side. And if the price further moves up, again they'll also modify the orders. They modify the pending orders. That is what the HFTs do. They'll be keep on modifying the orders throughout the day, and they'll track the price and they go and supply the liquidity. Again sell side, again buy side, they float liquidity. And again, if the market further moves away, these guys modify the order and they will keep on changing the orders. Now, does somebody manually does that? Of course, no. We are living in a technology era, so means all these things will be automatically kept on modified. That's what HFTs are all about, right? They'll be very quickly they'll be modifying based on the price action. Maybe if you have time in Bookmap, go and watch out the ES Mini. You can see that the order will be there. Price moves up, suddenly order cancellation happens, and then price move to the price move to a different level. The liquidity also closely follows many at times. So those are market makers primarily. Are you clear about this? What market makers are capable of doing and what institutions are capable of doing? Sometimes institutions they float the orders. As I said, institutions float the orders for two reasons. So while somebody is floating liquidity at certain level. So why they do that? For one reason, they are looking for a fill. Most likely, who are floating liquidity, they are mostly institutions only. They are looking for a fill. Number one reason. Number two reason, they may also want to create a wall of resistance or wall of support. They want to defend that level. So maybe they want to defend that level. So it can happen because of two reasons. But no matter what, majority of the time, markets do very frequently get attracted towards those liquidity zones. For example, if the markets are having a strong liquidity zones over here, let's say this is a sell side liquidity. Sellers are providing limit orders, a lot of sell side liquidity. We are continuously floating the limit orders over here. Sell side liquidity, sell limit orders. Now in that case, price mostly they'll get attracted towards those zones because that is the reason they are there. If the buying intention is, if at all the price has to break above those levels, the aggressive traders who are sending market orders are the one who can make the price action. Market orders only, they can bring the price action. Let's say if the market orders are aggressive, but limit orders are not aggressive, what will happen? The liquidity zone will be broken up and market will start moving towards the next liquidity zone, something like that. But what will happen if market orders are less aggressive compared to the limit orders? Or limit orders are more aggressive, limit orders are more dominant. Now what will happen is like even if the price is coming and touching those levels, they cannot be able to move because continuous flow of limit order, like a river, a strong river is flowing there. So means what will happen is like repeatedly price action will try to beat up. Delta will be positive because buyers are continuously showing up, but they're not able to outsmart the limit orders because the supply is more. So here, limit order supply is more. So I'm not talking about supply demand. Remember here, limit order is more than the aggressive market orders. So that's what we call as a limit order supply is more. Limit order supply is more. So in that case, what will happen? The buyers will be keep on showing up. My cumulative delta will be keep on increasing. My CVD, cumulative volume delta. CVD means what? Cumulative volume delta. Cumulative delta will be keep on increasing because buyers are showing up, but markets will go sideways. It will be hitting a wall of resistance. Again, it will fall down. Again, they'll try to hit the resistance. They'll fall down. Again, they'll hit the resistance and they will start falling down. Now, this is what we call as a ceiling effect. The smart institutions, or at times maybe even market makers also, they want to defend those levels. So that is what I talked about over here. They want to defend those levels for some reason. Can a big money do that? Of course, only a big money can do that. Big money, who is a liquidity provider or who is a institutions, only those people can do that. All right, if you have any questions, I can take questions here, whatever we had spoken. Otherwise, we'll come back to the current market scenario. There are still more to talk about the liquidity map over here. So Sunil is having a question. In Bank Nifty future, it is showing 20 limit orders, which hardly range of 4 to 5 points. How it will work in Bookmap, because liquidity may show everywhere. See, of course, yes, the limit orders are going to be there everywhere because that is where the market makers are looking for the levels. They are going to chase the price. As the price moves up, they are also going to chase very close to the liquidity. If you would have seen that where the price is there, that is where majority of the instant liquidity will be there. But what Bookmap shows is like they don't show the where the current liquidity is. They show something called aggregated liquidity. So means over a period of time they'll be keep on more people will be sending keep on more and more orders. So they will build something called synthetic order book. What you are seeing at that instant is only the order book snapshot at that given time. What Bookmap does is, as I said, they build something called synthetic order book. So let's try to understand what is a synthetic order book is all about. So means it is more of an HFT phenomena. Most of the HFTs they build synthetic order book. Of course, Bookmap also builds the synthetic order book. Maybe I'll give a fair idea about how the synthetic order book works. I mean, what is that visualization is all about. So let's say at this instant price is here. So my liquidity is being more or less it is going to be in this band only. So I might be seeing like some mild orange color, or if it is strong liquidity is there, I'll be seeing it in red color or something like that is what I'm going to see if it is a strong liquidity is there on the sell side. As the time is flying, maybe more and more people might increase the supply. So over a period of time, it gets aggregated, means added up. If somebody is canceling the order, let's say here is what the liquidity is there. So far as the price is moving up, suddenly what will happen? This liquidity will be no more available. It gets faded. Suddenly, what does that mean is like somebody had cancelled their orders over here. They would have cancelled an order. Earlier, strong liquidity is there. Strong pending order is there. Strong liquidity. So by that time, it shows that there is a liquidity is there. Even though price is not coming and touching, that order slowly faded away. Maybe the color would have been started fading and finally it is no more. It is getting blank. In Bookmap, what does that means is those orders, whoever floated liquidity, now they are more interested in that fill, maybe for some reason. Maybe they would have got some better information. They would have modified their opinion. So they thought like maybe let me place liquidity later on. Right now, let's see, let some more price action let it happen, or maybe I'll try to plan. Maybe they might be doing for a different reason. So they might look for liquidity fill at better levels. So they would have cancelled their order. Sometimes even they will cancel their orders if there is going to be any major event. maybe you would have experienced that. Maybe I'll show you. When there is an let's say 11 o'clock, assume that 11 o'clock, I'm just giving an hypothetical information only. 11 o'clock, there is going to be an RBI policy announcement. Imagine that. RBI policy announcement. Just imagine that. Now, what happens till 11 o'clock is like a lot of market makers will be supplying liquidity. Assume that they are supplying liquidity in a band, multiple bands, they are supplying liquidity. So price is also fairly, they'll try to trade in this range. You can see some sideways markets. But the moment time is reaching 11 o'clock or just very near to 11 o'clock, 11 a.m., where the RBI policy is likely to get announced, what will happen is like the limit orders will be cancelled near to the event. So near to the event, near to the event, near to the event, most of the market maker orders, they get cancelled. Why? Because it's a threat. Event is always a threat. It's more of an any side market can take a direction. So as long as these market makers are there, as long as these market makers are supplying liquidity, what we will be seeing is a orderly markets. So market makers. So we'll call it MM. MM means market maker. If these market makers are present, what we will get is a orderly markets. Means market goes up, again comes down, again goes up, comes down. So market will be trying to make that sideways market. If the market makers are not there, what will happen? I'll tell you. We will be seeing a sudden knee-jerk reactions. Maybe I'll put it in a different color. What we'll be experiencing is a sudden knee-jerk reactions. So something like sudden knee-jerk reactions. And once the event is over, again you will see very wilder swings in the markets. Very repeatedly, you're going to see this kind of wild price action. Have you seen this? The moment RBI announcement is there, sudden fast move will be there. Now, why that fast move is happening? That fast move is happening because of the lack of liquidity. Market makers are feared to provide liquidity around that time. They might be providing, but they reduced drastically, and very few market makers will be competing, because generally when there is a strong event is there, it's a threat for the market makers. So generally for time being, they will not be present in the markets. That is where, if you would have seen Fed announcement, these kind of price actions are very common. If you would have seen RBI policy announcement, these kind of price actions are very common. You can see wild swing. Suddenly Nifty will be crashing down by 200 points, and very quickly within 10-15 minutes they will be ramping up like 300 points of Nifty. Have you seen any time in a regular markets? Look at the today's market activity. Let me go back to the today's market activity here. Are we seeing that kind of price action? Why we are not seeing now? Because we are in a organized markets. Market makers are peacefully supplying liquidity. As long as the market makers are supplying liquidity, markets are more or less likely to rotate around the VWAP. Yes, aggressive traders also missing. Means what? Lack of enthusiasm is what we are seeing in the markets. When I am seeing lack of enthusiasm, market makers are the one who is going to be dominant. Remember one thing, market makers cannot create the price action, but they can control the price action. If they want to defend, they can defend with liquidity. They can create support, resistance, instant support, instant resistance, they can create. If there is a strong traders are there, let's say if long-term players are coming there, then how the price action will look like? Throughout the day, long-term players are keep on buying aggressively. Usually they don't do that, but when they are doing that, price hardly will touches the VWAP levels. I'm sure that days are very rare. So means what? If the price action is moving up, VWAP will be closely chasing the price. It looks something like this. If the price action is keep on going on the upside, let's say this is the price action, it will be keep on taking a trend. VWAP also closely follow the structure. like a moving average, like a child. It closely chases the price. Wherever the price is going, VWAP also chases. Now, what does this mean? These kind of days are dominated by long-term players. Long-term players or institutional trading activity, sector level buying is happening. Now, these kind of days, what can happen? Long-term traders are the one we are competing with. Or we are looking into what? Long-term traders, sector level buying could be seen. Sector level buying will be seen. And not only that, what else we could see? Heavy volume, heavy aggressive volume, heavy aggressive volume. If you look into the volume flow for the day, you can see that heavy aggressive volume would have been happen on that particular day. That's very, very important. That is a very important information. But what today's activity is missing? Heavy volume activity is missing, not aggressive traders today. And price is also rotating to the VWAP. So today's price action in Nifty also and the Bank Nifty also. Nifty futures and Bank Nifty futures is what I'm talking about. We've been experiencing lesser aggressive volumes. Means neither buyers are not aggressive, neither sellers are also not aggressive. And price is rotating towards the VWAP. Price is rotating towards the VWAP levels. Why? Because around the VWAP only market makers are providing liquidity. So around the VWAP. Most likely these are the days VWAP plus 1 standard deviation, VWAP plus 2 standard deviation. The market makers will be supplying liquidity around those levels. Market makers supply most of the liquidity. That is why price action also rotated around that level. Since there are no aggressive traders are there, price is not able to go beyond the liquidity zone. Even if they're going to go beyond liquidity zone also, and after that there won't be any liquidity, price will come back towards where the liquidity is. Where the liquidity is obviously near to the VWAP, these kind of days. So that is why if you see the price action will be rotating back and forth towards the VWAP because most of the liquidity itself supplied in this band. Most of the liquidity on both the buy side also, sell side also. More supply happens in this band. Both market orders, both the buy market orders also, sell market orders also, mostly it is supplied in this band. Maybe I'll shade the zone, okay? The shaded zone. The shaded zone is where the liquidity zone. That is why price repeatedly revolves around those levels. This is quite common. Even if you are seeing a highly aggressive trader for some point also, once again they will get back to the zone. Because that is where the supply is there. If I'm an institution, if I want to find more supply, I have to trade in this zone only. Maybe in market profile, we'll call it as a value area, right? Any questions should I have to address? Let me know. There's a lot to talk about Bookmap, but I'm sure today I would have given some basic idea about liquidity and volume and what is the primary intention for the markets to get into sideways price action. Sunil, I hope your answers got addressed. If yes, please type yes so that I can get a fair idea that whatever I'm talking, you will able to get those information. All right, thank you. So let's have a quick check before leaving out for the day. Let's see that what is the price action is doing. Price is still hugging through the VWAP very tightly. So these kind of days, right? The volume, I mean, since the price is also dull, volume also dull, price is hugging through the VWAP. It's very common that price hugging through the VWAP. Opportunities are going to be very, very limited. So means I can go and trade for 10, 15, 20 points. That is the max I can do. We are in a low volatility region. See, when it comes to Bookmap, couple of things you should aware about that, right? From an intraday perspective. So what I'll tell you what are the important things. One is definitely one should have a fair idea about liquidity if you are trading using Bookmap. Number one. Number two, how the volume flow is happening for the day. Volume flow. So means for liquidity, how to study about market makers and institutions. Institutional flow. Volume flow is primarily because of the demand for the day. Let's say there is going to be suddenly there is a nuclear threat is happening. What will happen? Suddenly there will be a large demand will be there on the sell side. If there is a large demand on the sell side, obviously market makers will supply liquidity on the buy side. There will be always the traders who come and fulfill the demand. Aggressive traders, they represent the demand. Now, so remember, I'm not talking about the supply demand principles of price action. Demand is what? They are asking. I just want to buy now. I'm just going to sell now. That instant demand gets created when that, let's say, there is a bearish news is there. Now, sometime back, what happened? Sometime back, we had in US market, inflation numbers got cooled off. Suddenly, what happened? Suddenly, a big bullishness happened in US market. That particular day, S&P 500 ES Mini went up like almost 5.5% closing. Next day, Indian market is opening. So when people are looking into those information, hey, yesterday US market went up like 5.5%. Now what will create is like suddenly aggressive demand will happen on the buy side. More buyers will be demanding more market orders. If more buyers are demanding more market orders, then obviously somebody has to be on the opposite side, right? Who are they? Liquidity providers. They have to go and provide liquidity on the sell side, whether they like it or not. Because that is their duty. That is how they run the business. So tracking the volume flow shows how aggressive the traders are. It can be a retail trader or it can be institutional trader also at times, because when strong trend is evolving, mostly long-term players are the one who will be the aggressive trader, who will be the driving force. On a day-to-day basis, what will happen? On a day-to-day basis, long-term players will be either accumulating or distributing, so they will not show the aggressiveness every time. Maybe for 5-10 minutes they will show and then they will wind up. That is what, if they are accumulating, distributing also, they will only accumulate for up to a certain level only. They'll buy it aggressively only to a certain level only. Because if they keep on buying throughout the day, what will happen? If a long-term player keep on buying every day, what will happen? Market will be keep on going up only. That is what sometime back it happened in Bitcoin couple of years back. Now what is happening? Last 1 year, Bitcoin is coming down. Cryptos are coming down. Cryptos are crashing because long-term players, they are not confident enough. A lot of scams are happening. Like aggressively, they keep on selling in the markets. Of course, it's a cycle, right? So once they'll buy it, next time they have to be sell in the markets. Now aggressive sellers are coming and selling in cryptos. So liquidity and volume flow alone, it is not important. There is a third dimension. This is what we call as a volatility. Now, volatility can be of three scenario. Volatility, typically we can classify a market volatility into three category. Market volatility. Current market volatility is what I'm talking about. Current market volatility, we can use what? It can be a low volatility, or it can be uh, high volatility. It can be moderate volatility. Moderate. Volatility can be measured using a couple of ways. One is anticipated volatility. Another one is the current market volatility or historical volatility. So there are a couple of tools. Are there very simple tools? Are there ATR you can go and use to measure the current volatility, current market volatility. Or for anticipated volatility, we can use IVs, implied volatility. We can use it. This will be like anticipated volatility or future volatility. Means what is the market volatility expected in the next 30 days or so. So if you have a fair idea about what, if ATR is also low, IV is also low, that means what? They are mostly compressed markets. Price may open with a big gap up, and after that nothing will happen. Market will start rotating around the VWAP. Now, off late, if you are looking into the Nifty activity, volatility has been coming down. So how do I know that volatility is coming down? Very simple. You just go and open an IV charts. Very simple. You go and open the IV charts. So what happened? Go to the daily charts. I'm not a big fan of looking on a 5-minute time frame, hourly time frame and all. Daily chart price action has been cooling down. That means expectation has been coming controlled fashion. Anticipated volatility came down. Not only that, if you are looking into Nifty and you are pulling up ATR also, what you could have been seen that is like the nerves in the market has been calmed down. So means average true range. If you look into the average true range, volatility has been cooling down heavily. Right, the volatility has been cooling down, right? The volatility has been crazily cooling down last couple of days. Price is going up, but volatility is cooling down. ATR is cooling down. ATR is getting calm. So ATR is coming down. IVs are, implied volatility is coming down. VIX is coming down. So means I'll get smaller ranges in the intraday perspective. I'll be getting a very small ranges. So if I am going to see smaller ranges, then price will be like if I'm in a low volatile markets, if I'm in a low volatile markets, what will happen? Mostly creates a dull, boring price action. Dull, boring price actions. Maybe gap up can happen. First 1 hour aggressive price action will be there. After that, what will happen? Price will start rotating around the VWAP. Even if the market goes slowly also, price will be mostly chasing the VWAP for the day. Or if the markets are dull, you'll be feeling like the VWAP will not move at all because lesser aggressive price action. Here at least something is getting aggressive over here. But right now, today's kind of market, absolutely no volume is there. So what is happening here? VWAP will be staying straight line and price will be circulating around the VWAP. That is what typically it happens. But in a highly volatility, similar things happen, but in a very wilder manner. Because in a highly volatility, aggressive players take control of the market majority of the time, despite market makers are there. High volatility itself, because aggressive traders are very highly aggressive traders. We've been competing with highly aggressive traders. Whereas in a low volatility, the enthusiasm among the aggressive traders will be very less there. So we'll be seeing a less enthusiasm from the aggressive traders. Now in that case, what will happen? In that case, if I'm dealing with a highly volatile, highly aggressive traders, still there you can see directional price action. Intraday, you can find a very good directions, but still price will be rotating to the VWAP one at least once or twice maximum. So means even in a trending markets, so market will be trending, but at least once the price will be moving towards the VWAP. Still market will be trending most of the time. That is what we'll be seeing majority of the time. 60 to 65% of the time you're going to see this in a highly volatile markets. At least once you can see a touch towards the VWAP. But if you are seeing a multiple touches, so those are very classical indications that volumes are running dry in the markets. Or if the VWAP itself not moving throughout the day, that means the volumes also running dry, dead, means you also have to learn to control the expectations in the markets. And one of the major thing, if you are a bookmap user, is like you need to understand the volume flow, how the volume is flowing for the day. Is it stronger volume? Is it a lower volume? Is it a dull, boring volume? Maybe these kind of simple information will let you understand how to deal that particular day, because different day we have to deal with the markets in a different manner completely. Because what I'm seeing is like I'm seeing only the aggressive orders only. I don't know what the limit orders are doing. If I am seeing the limit orders, definitely I can validate whatever I'm thinking is true or not. But the problem with the Indian market is, as I said, like we can only, as of now, we can see only aggressive trader. Very soon, Bookmap may bring up with the limit order also. Limit orders, it will add more conviction to your trades. That is the only thing. But at this point in time, if you're a beginner out there, definitely one should learn to understand how aggressive traders they behave in a highly volatile markets, low volatile markets. So how the liquidity will be there. You see that the price, the VWAP itself running sideways. It's been running straight. Price is hugging. Every time price goes down, coming back up, again coming back to the, like kind of a magnet. So I'm sure you might get some very basic idea about how to deal in a sideways markets, when the sideways market happens, or what are the reasons why the sideways market happens. I'm sure there are many traders, they might be willing to trade a sideways market from here on. I'm one of the biggest, I love sideways market a lot more than the trending markets, because sideways markets are pretty easier to trade compared to trending markets. Trending markets are at times very difficult. Sometimes gap up, gap down, it creates issues and hassles. But sideways markets are not like that. It is pretty easy to trade, and that is what it happens majority of the time. 65% of the time we're going to incur the sideways markets, even in a high volatile market also, low volatile market also. Irrespective of market volatility, what do we see is like price very often come back to the VWAP level. So most of my trades are towards VWAP, right? So it is one such day, very interesting day, where you have to come up with a controlled thinking, where one can, it's more of a scalper day, I would say. That these kind of days are primarily towards scalpers. Probably if somebody is an higher time frame player, a positional trader or investor, they might not gonna like these kind of days, but these days are part of the trader's life cycle. I'm sure if any questions, I can answer those questions. Otherwise, more or less, I'm done with today's session. And I say thank you for coming by and attending the session. I hope you learned something very informative things about the markets. All right. So these are very basic information if you want to use the Bookmap as a tool. So I say thank you for Bookmap, and thank you for Urvashi for providing me this opportunity to talk to you all. Thank you once again.
Thank you, Rajendran. That was very insightful. I'm sure that everyone who has attended this session has learned a lot many things from this session. One quick information for everyone who is attending this session. So we have recently come up with a footprint add-on for the Indian market, as
Maybe
many
I'll
of you have suggested. Right. Can you just go to
I think it's available under add-on section. I think I haven't
no,
tried it
just
out
can
yet,
you go
but
to yeah, can you go to bookmap.truedata.in? I think it would be convenient. Yeah, bookmap.truedata.in. Yeah, yes. Can you just scroll down a bit? Scroll down. Yeah, a bit more. Just go to the advanced add-on section. Yes, right. So earlier we have launched footprint, and we are also going to launch a couple of new add-ons for the Indian market. So these have been launched for the US market already, and these are actually helping the traders over there. So we thought that it would be great for the Indian market as well. So apart from footprint, we are coming up with instrument copy, break-even point, price levels, cross PBO as well. So all the pro users will already have access to all this by the end of this week, and the new users can get the access from the end of this week, which means like tomorrow, Friday onwards. In the coming sessions that we'll have with you, Rajendran and Natraj, so we'll be covering footprint in detail, because a lot of you have questions like how do we set it up.
Footprint, I've been watching footprint charts for the last almost a decade now. So I have a very decent expertise in footprint. So maybe in next session we can talk more about footprint in a very detailed fashion.
Absolutely, yes. So when you have your next session, Rajendran, then we can open. We can have like a larger audience per se. We can have the session on YouTube as well as apart from Discord. So it would be better for new audience as well. All right. So on that note, I will let you all go because it's time. Thank you so much for joining today's session. And if you have any questions, feel free to ask on the Bookmap India channel. I'll revert to all your questions. That's it. Thank you.
Thank you, everyone. Thank you.